Welcome back to the Anomaly Angle, and today we're going to tackle a subject that gets a lot of publicity online, a lot of publicity on social media, one of the most popular tax strategies out there, but also the general theme of family tax planning, how we can optimize that, because we believe here at Anomaly, a lot of business owners especially are leaving a lot of money on the table when it comes to benefits to their family. So we're going to go through that, cut through some of the myths today, talk about the do's and don'ts of these strategies, and leave you with the playbook of how to implement this in your business and in your lives. But before we get there, John, welcome back. What's going on with you?
Not much. Summer's starting here up in New England, so it makes things a little bit brighter. And, I think it never really slows down for us, but I think, we're kind of in the period where we're doing a lot of Q2 check-ins, a lot more advisory work for our clients. So, no hard deadlines. Great.
Yeah, that's great. Yeah, definitely. Q2 is a big planning time of year with our clients. We try to focus on getting on track, see what's happening in their business. We're seeing a lot of different things in the economy, good and bad, and trying to meet people where they're at, depending on their industry. There's different things going on. So trying to learn about and listen of what's going on, and then hopefully provide some advisory of how we can help them. And of course, we are growing, so bringing on new clients, new business owners that are looking for better books, better accounting, and better tax strategies. So speaking of tax strategy, today we're going to tackle the first thing that people are going to ask about when they have a business and they get kids. Can I hire my kids onto payroll? So this one's a controversial one, right? There's a lot of stuff out there. It's very gimmicky, very clickbaity, but there are ways you can do it and there's ways you can't do it. And we're going to kind of cut through that today and to tell you the why of it so you can have a playbook to do it. So let's look at the overarching theme first. Can you hire a child to work in your business? The answer is emphatically yes, right? You absolutely can do this. There's nothing saying you can't do it. Now, you need to navigate state law when it comes to hiring minors. Now, every state's a little bit different here, but broadly speaking, most states have exclusions of certain minor employment acts when it is family members, right? Again, don't take that to the bank. Check with your state, check with an employment attorney, but most states do exclude this from different rules. So you can hire a child to work in the business. It's completely fine, legitimate. Where do things go awry, what we see on social media? Okay, people will say, hey, you just hire your child and you pay them the standard deduction, right? Can't do that, right? That's the first red flag. Why? When you're hiring a family member to work in your business, there's extra scrutiny that's potentially coming from the IRS someday. You have to hire someone at the rate and the wage in which a normal third-party person would be hired. For example, if John's 6-year-old child is working for us, he cannot make $50,000, right? Because there's very few examples where a 6-year-old would work in an accounting firm and be paid $60,000. It just doesn't happen. Now, if you're hiring a child, say, to do office work like cleaning, sweeping, copying, fax, all that kind of stuff, and they're a younger child, yes, is it legitimate to pay them $8 to $12 an hour, depending where you live? Sure, that's completely in line. I would always recommend a client get a little bit of a comp, right? So there's really good resources out there today where you can actually look up online. You could use AI if you'd like as well, and kind of put in the demographics, right? I have a 12-year-old child. They're going to do the following tasks for my business. We live in X state. This is the type of business I own. What are the actual rates for this type of work? Because you can look at job boards for things that are being hired around this, for clerical work, for physical labor work as well. So the first thing we tell people is you need to benchmark that first, because it's likely not going to be the standard deduction, right? You'd have to work a lot of $8 to $10 an hour minimum wage type of hours to get up to that amount, because look, your children are not going to be working full time.
Yeah, totally. And the other thing too, like fair market value, commensurate wage, like that's definitely point number one. The other part, which is kind of related, is they need to get paid periodically, systematically, right? So, whether it's monthly, bi-monthly, in some sort of arrangement that is like akin to the real world. We've had clients that come in with, prior solutions. They're not only paying the standard deduction, but they're just like paying it at the end of the year, right before the bell on December 31st. So talk about like a double red flag there. No one's just going to get paid at the end of the year. Makes no sense.
So it's an employee, right? It's how employed work. So to back up here, yes, you can absolutely hire your child. The child's wages must be commensurate with the activities they're performing, and it must be a regular, frequent, occurring activity in payment. Now, the next kind of big FAQ we get is the age, right? The age test. Oh no, how can I hire my child that's 8, 9, 1 month old, 18 years old? What are the rules? Okay, so now we're going back to state law versus federal law. State law, right? You need to talk to local employment attorneys. You need to read your state's laws about any special rules or policies that exist for hiring minor children, right? That is a state level issue for the most part. A lot of them, again, are going to exclude these rules if it's family employment, but check. Now, federally, two things. Number one, there is no bright line test. You're not going to go on the IRS website. You're not going to go in the tax code, and you're not going to find the answer you're looking for. It's not going to say, hey, when they turn 7 years and 6 months, they're eligible. It's not going to say that, right? So what do we do as a second step on our research? We look at court cases, right? The tax court. Now, there has been some tax court cases over this, right? It's ancillary stuff. It's not always direct cases, but you can infer. And there's been some cases where as young as 7 years old has been deemed appropriate. Now, that doesn't mean that 7 is appropriate. It also does not mean that 5 is not appropriate, right? If we're going to stretch that example. But we're just saying that is where there has been judges that have agreed with that. So the next question we get is, well, can I hire my child below that? Now, this is where it gets a little interesting. There are opportunities for some people in some professions to hire minor children under that to do things like child modeling, images, pictures, social media, right? Because we do work with a lot of like content creators that literally half of their job is growing their business, which revolves or maybe around something around family, right? So they're constantly having their kids in their social media and Instagram ads and Facebook ads. So the answer is yes, right? And that is a thing that's been going on for decades. Child actors have been hired for decades for advertisements. We're just in this like new wave now of the social media world. So it's a little bit, the reason I hesitate is a little bit untested, right?
Right.
Theoretically, the answer is yes. Do I think that an architect should be hiring their minor child for social media? Absolutely not, because I don't think that is a normal, ordinary thing that an architect would do. Do I think that someone is in the business of maybe selling something on social media that isn't in the realm of children or child products or something like that? Or maybe it's a service or a coaching business around family stuff. Is that legitimate? I would think it is, right? Because for years, people have been hiring child models and actors in those professions. So if you get what I'm saying here, do I think that like us at an accounting firm should be hiring John's very young children for website pictures? No, because an accounting firm doesn't do that, right?
Right.
So it has to line up with what your business is. And everyone wants this black and white answer about, can I hire my young child on payroll? And the answer is not going to be black and white. It's really dependent on facts and circumstances. And I will say, the younger the child, the more narrow that is. So 12, 14-year-old kids, they can really work for any business, right? They can sweep the floors, they can do social media, they can hang pictures on your walls, they can clean the carpets, whatever, right? It's a workable age. The younger you go, the more narrow it is. And that's just our opinion. You're going to find people on social media, you're going to find accountants saying that you can hire your 1-month-old. I don't think that's worth it. I don't think that the risk is too high, and I don't think it's legitimate. So that's just our opinion on the matter.
Yeah, totally. I mean, like Greg alluded to, I have a 6-year-old. I'm pretty aware of what he can and cannot do. And in our industry, there's not a whole lot that he could contribute, right? And I don't think there'd be a justification for it. But I think there are certainly areas, certain industries, specifically with social media, with content creators, people that are doing a lot of brand work, UGC type ads. I think there are opportunities where you can, leverage even younger kids to help, and then in a way that makes a lot of sense. And I think we've seen some dynamic ways that our clients have done that, right? They'll pay their kids like based off of the impressions that they get, or based on like the results of these posts, right? So you have a justification and a backing for something when you have a lower age, which could get scrutinized a bit.
Yeah, absolutely. So we can go down that rabbit hole for days, but that's not the purpose of today's video. Just throwing that out there. Now, the second thing is, okay, and I've checked the box. I do know my child of whatever age they are eligible to work state-wise. I feel good about federally. That's ordinary, necessary employment here. Now, how do I do it? So again, you're going to find different theories out there. For the most part, you're going to need to hire them onto payroll. Do not 1099 them, because it's going to, if you receive a 1099 for over $600, they're going to file a tax return. So no 1099, you're going to put them on actual wages. Now, this is where it comes down to what type of business you have. If you're operating, say, an S corporation, or you just have a Schedule C single member LLC, the answer is different. If you're operating a single member LLC, right? So it's a single member LLC, not an S corporation, you actually have a little bit of a better benefit here. Why? Because by law, under 18, that child is going to be excluded from FICA, right? So they're not going to, there's not going to be payroll taxes on the earnings. So for example, they're paid $10,000, they're not paying FICA on those earnings. Now, if it comes from an S corp, you do, right? So it mutes the benefit a tiny bit, not a big deal. People people get all stressed about this. It's a couple $100, right? Maybe a couple thousand, depending on how much it is. But just know that there are different payroll tax differences between the entity that you have. So sometimes people with a lot of different businesses, right, they'll choose to employ their child at that single member LLC business because there's slightly better tax benefits. Slightly is emphasized there. So whatever entity you have, you're going to hire them onto payroll. They're going to get onboard onto payroll. They're going to be paid through your payroll system. As John mentioned astutely before, regular recurring. If you run payroll on a bi-weekly basis, they better be on that bi-weekly schedule. Don't think you're going to have them work for 12 months and then pay them on December 30th. That's not how it works, right? So you need to pay them at the same schedule that you're paying your other labor or other employees. Number two, be careful of states, because yes, it is true, if you pay them an aggregate that falls somewhere below the standard deduction, round math here, let's call the standard deduction in a given year $15,000, they paid under that, yes, they are not going to pay federal income tax. I alluded to they might pay a little bit of FICA or self-employment tax, or we call it payroll taxes. They're not going to pay federal tax. However, not all states have a standard deduction like that. So some states do not exempt all that. So you might have a little bit of state income tax to pay. You may not. It depends where you live. It depends on the rules of your state. So just be careful. You need to check, right? Because you might have to plug that W-2 into a free file system and pay $80 to the state, right? I don't know. It's going to be small, but just be aware of that. We've seen people that aren't aware that yes, you still have a state filing obligation, even if it's not a federal filing obligation. So the steps here, right? We've researched, we've hired, we've cleared the labor laws, we've onboarded them onto payroll. They are being paid for the work that they're performing. Ideally, we like to see timesheets. We like to see backup of the duties performed. I think it's a really good audit protection mechanism to actually have you fill out, or the child, depending on their age, fill out the duties, right? Puts them in kind of a good how a really an employee works, right? Fill out time cards, fill out some kind of wage sheet that shows what they did, the hours they worked. It's just great for the file. Then
we actually when we work with our clients, we put together, it doesn't need to be like an employment contract, but it's pretty much set up that way.
Yeah,
where it's going through the duties, the pay rate. We just want to be, overly cognizant of documentation, right?
Absolutely. So that's all set up, right? And then you're paying them, right? Now, yes, they may get raises over time, but that's how it's going to work. Why are you doing this as an employer, right? The big picture. Well, again, let's just say it's $15,000. You are receiving a compensation deduction, right? So big picture here, right? Big picture. People think about the big picture. Say you're a business owner, you're crushing it, you're paying a 32% effective tax rate, you're now getting a deduction. So say you have 3 kids, throwing it out there, say that's $45,000 deduction, you're shifting that, right? In $45,000 that otherwise is taxed at 32%, you're shifting it over to your other family members here, and they're likely paying approximately 0%, right? Maybe a percent with some of these fees I'm mentioning. So you're taking $45,000 taxed at a high tax rate, and you're pushing it down to your family who are otherwise probably going to give the money to anyways, right? And you're getting that deduction and you're shifting to them and they're not paying tax on it. So it's a wonderful arbitrage opportunity. Let's make the opportunity better though. John, how do we make the arbitrage opportunity even better on the strategy?
This is really the only place that we see where you can really undertake this strategy. And that would be taking that money that is now essentially tax-free to your child and putting it in a custodial Roth account. So then we're dealing with money that is not taxed going into a post-tax account that's going to grow tax-free. It's really like a double benefit.
Triple benefit, actually. Think about it, right? So deduction, we get the deduction as the business owner. The child is putting the money in after they paid tax, but they paid 0 tax, right? And then it's going tax-free forever. It's a triple threat strategy that doesn't exist elsewhere. Now, the first pushback I get is, well, why do I have to pay my kid? I just can put the $7,000 in the account. Wrong, you can't. We've actually seen people do this before, and you will eventually get letters from the IRS on this, is that if your child does not have earned income, right? Earned income means wage income or contractor income. You cannot contribute to an IRA or a Roth IRA. Let me say that again. If your child does not have earned income, active income, you cannot contribute to a retirement account. So they might have dividends and interest and stocks and things like that. That's not good enough. It's not earned income. That's portfolio income. So this is one of the rare cases where someone can have earned income, pay $0 in tax on said earned income, put $7,000 of that earned income into a post-tax account, right? Gaming the system because you're supposed to pay tax on it, but legally you didn't have to. And then it's growing tax-free forever. So let's just say that was $7,000 per year from age 7 to 18. You're going to have a good amount of money in there and compound that at 7%, someone smarter than me can do that mental math. It's a lot of money, right? You have a seeded account there. Maybe it's for education. Maybe you let it ride into the future. Maybe they go into the trades. Maybe they start their own business, right? But they have a wonderful account, and that money, then the principal can always come out tax-free, and you do pay tax on the earnings if you take it out early in a Roth, but it's still a pretty good picture that's put together.
Yeah, totally. We always get questions too, just on like the actual tracing of this, like the mechanics, which you kind of touched on.
Yeah.
So it's like, way it would work is the money does need to go from the business into an account that the child, has some affiliation with, right? It's generally a minor, so it's like a joint account or like a custodial bank account. Once it hits there, then you can make the contribution up to the annual limit to that custodial Roth account, which will be a custodial account for the child.
Yeah, no, that's a great point. It is important to have these details correct because, again, you wouldn't want something that's kind of blown up someday because you forgot these easy steps. Yes, it's a little bit more work, but to do it correctly is really important. So putting a bow on this, business owners, absolutely, you can hire your children. You're not going to get black and white answers of the how, right? You need to make sure that you understand your business the best. Is this normal to your business? Are the duties they performing in line with other duties that could be performed? Have you cleared state law? You set them up on payroll? You're paying them on a regular, recurring, fair market value basis? And then, yes, please think about opening that Roth account. So strategy number one, hiring the kids on payroll absolutely can be done. Very popular if done properly. Be careful of a lot of the stuff you see on short form social media about this, where you have people driving in the car saying, let's hire our baby and pay them $15,000. It's probably going to cause you some trouble someday. So do it the right way. Now, number two, what's the next thing that we want business owners to think about? This is a new one, right? This is new in 2026 we're in, would be what's called the Section 530A accounts. No one knows what that is, right? Otherwise known as the Trump account. So these are the new things that came out through the One Big Beautiful Bill Act, referred to as OBBB for the rest of this video. New law that came out. It's a really interesting thing, right? And you've seen some entrepreneurs get behind this, like Michael Dell has put money into this program. It's a unique thing because it's not really comparable to a Roth or an IRA or a UTMA or a 520. It's kind of its own unique animal in a way. And let's just kind of talk about what this is, because these things are new. There's not a ton of guidance. And we've gotten a lot of questions from clients that like they're almost misguided because there's just stuff going around about them. So this is what they are. They are an account that any child under 18 can open starting July 6th, 2026. You can sign up for them in advance now, but the actual funding of them will be in July or after. So it's not just for newborns, right? We get a lot of people saying, well, I didn't have a child. No, it's not just for newborns. Any child is under the age of 18. Number two, if you had a child or plan to have a child or will have a child, or maybe you don't know you're gonna have a child between 2025 and 12/31/2028, Uncle Sam is giving you a seed contribution of $1,000. So you're getting $1,000 into that child's account. If you did nothing else, right? Say you had a child like my friend John here did in 2025. If he does nothing else,
That wasn't the reason why we did it, but
yeah, debatable. But if he opened that account, he's gonna get $1,000. Even if he did nothing ever again, right? You're getting $1,000 into it, and that's gonna grow at probably 6 to 7% per year. There's no gotchas. There's no, you got to do this, you got to file a tax return. There's no gotchas, right? It's $1,000. I've yet to find a compelling reason. I've yet to find a compelling business reason or financial reason why people aren't doing this. I've had some people that have talked about not doing it for other reasons, but for business and financial reasons, the $3,000 is $3,000, right? Maybe you don't want to contribute to the debt. I don't know, but the $3,000 is a $3,000.
I think a lot of it's privately funded too. I mean,
a lot of it is privately funded. We're not going to get to the Dell part of this because it's a very narrow thing that's a wonderful thing that he did and his wife did. It's a very narrow thing that they're doing. It's additional money to children of certain income limits and certain zip codes, to keep it simple. But the general public here, if you're 25 to 28 child born, you're getting the extra $1,000. Everybody else, ages 18 and below, you can open and contribute. Now, what can you contribute? You can contribute up to $5,000 annually. Not just you, your family, your grandparents, your surrounding friends and family can do this. A nonprofit or a church could contribute to your account up to the aggregate $5,000, and your parents or you as an employer, the business, can also contribute up to $2,500 of that $5,000. So put it simply, you can't go beyond $5,000 a year. So you can't have Uncle John and Uncle Greg and Uncle Mike all put $5,000 to get to $15,000. It's $5,000 in the aggregate across all the things I just mentioned. So where does the strategy come in here? Well, there's a unique part of this where businesses can offer this as a benefit. Now, if you're a closely held business with very few employees, you might not have many people that fall under this, but here's the thing. If you offer this, you can let's just say that we had this program in place, we could contribute $2,500 to John's child's Trump account. That is going to be a compensation deduction to the business, right? And it's income over to him, but there's a special exclusion in the law that says it's not taxable compensation. So we're getting a deduction as a business owner, we're shifting it, the employee's picking it up, and they don't have to pay taxes on it. It's going to get reported somewhere in the W-2, not really sure yet, and then it goes into the child's account tax-free. That $2,500 is tax-free. Now, this is where these accounts get interesting because they're not Roth and they're not really an IRA. So the money is going in. Other than my business exception here, other than that $2,500 exception I'm mentioning, if I just put my personal cash into John's child's account, that is not deductible, right? That's not deductible. It's not like an IRA where there's a deduction on the way in. So it's not deductible, and it's not like a Roth because it's not post-tax in that account. It's actually still pre-tax, right? So you might have to rewind that and hear that again. The money that goes into the account is going in pre-tax. Most things that go in pre-tax are going to be deductible, but this is not deductible. It's going in pre-tax. Now, it's going to grow tax deferred until the child is 18. At age 18, there's a decision to make. You can roll it over, likely into a Roth. Most people would probably do that. You could withdraw the money, and there's different things you could do at that point, and there would be taxes to pay if you did so. But most likely, people are going to then try to convert $35,000 of that account into Roth. There might be excess taxes, and you might have to go from there. But it's a wonderful opportunity to grow extra money on top of our strategy we said before, right? The $7,000 in a Roth if you're a business owner. Now let's get another $5,000 into the Trump accounts. Now you're looking at $12,000, $13,000 per year if you have this cash available that you're nesting your children's account with that has some business tax benefits to it that otherwise would not be available like in the other popular legacy strategies like a 529 in a UTMA. The other benefit of the Trump account strategy and the payroll strategy, we'll call it, is that it's not a given. The world's changing a lot. Their costs are out of control. It's not a given that children are going to go to college. So you can get trapped sometimes in 529 plans where people end up having to do these conversions or these transfer of beneficiaries because their child doesn't go to college. These do provide a little bit more flexibility. In the worst cases, they just become retirement accounts, right? For your children long term. So
you don't need to have like earned income like you would need in a Roth,
correct,
to be able to contribute to.
That's a very, very smart point there, is that if you're also in the bucket of, hey, I don't own a business, how does this apply to me? I can't do the Roth strategy. Well, this is your backdoor way into it, right? If you didn't have a business, if you don't have a business, you cannot do an IRA and you cannot do a Roth for your child. You can, yes, do a 529 and or you could do it a UTMA. This is another way to get a retirement account started for your child that's otherwise not available to you. So it's a unique opportunity. Again, now I don't know how long these will be around for, at least until 2028. We'll see if they get extended. My guess is yes, because typically the north side of the aisle that Congress ends up on in the next election is they typically don't take away these kind of programs. So like Roth is named after a person. These things cover all IRA, like these things are all named after people. They don't necessarily go away. They might change some benefits and laws over time. It'd be highly surprising for them to completely take it away, but you'll be able to fund these accounts. So like 2026, 27, 28, right? You'll have several years to be able to fund these accounts. And if you're a business owner, really think about this. Now, talk to your CPA because there's going to be what's called discrimination rules in place. You can't be like, I got 50 employees, I'm just going to put the money in my family's pocket. You need to be aware of offering things to other employees, depending on status of those employees, which I won't bore you with today. But you need to look at those kind of things there. But it could be a really interesting opportunity for you. So Trump accounts, really, really good strategy.
Yeah, we're excited about them. I think the only other like nuanced things are, I think only like certain custodians will be managing them. And then I think on the investment side, it's pretty low cost, like just certain index funds, right?
Index funds, I believe they already selected. It's like an Acorns or something. It's a low cost provider. And that was because I think the government was concerned that our financial advisor friends, right, they're gonna make a killing off of charging AUM fees on these things. So they don't want it to be that way. It's a low cost type of investment that's available. So we're gonna kind of hold there for today, right? We're going to another part of this and we'll talk about some of the legacy strategies, but there's so much depth to these two. I think that's a lot of good information for business owners. If you can just remember the steps of hiring your child properly and then remember these new accounts, right? You can go to just Google Trump accounts, go onto the government website now. You can sign up to be on the list. You could also fill out a form with your 1040. Not many people did that. It's the same thing, but it literally takes 5 minutes to do this on the IRS's, or it's not the IRS, on the Treasury Department's website very, very quickly to get on the list. And then come July, there's gonna be more information out there. So you can remember the hiring and the Trump account, you're gonna be in really good shape and hopefully create these tax deferred, tax-free nest eggs for your children. So stay tuned. Next time, we'll talk about some other strategies for business owners. We have some really interesting ones in there. But for now, John, have a good week. Take care for now.
Yep. See you then.